But sometimes when the market is trading lower and you're feeling on the floor that we're all selling and everyone's paying up every time, so someone sells a low and then the market maybe makes a one tick lower, pumps all the way back, then all of a sudden people start getting out, the market comes back down here again, makes a new low, people are shorting again, and it looks quite aggressive, but what actually is happening is a lot of orders being pulled, and then all of a sudden it comes right back, and it actually might take out the previous little swing high move. And you're feeling this, and you're feeling frustration on the floor. And what's actually happening, there's a potential what's undergoing is a liquidity operation, what I call a liquidity operation by some potential institutional fund, some algorithmic, and this is not pure speculation, but the nature of this is what actually starts happening is that locals are all offering the lows and they're paying up higher. And this market might actually leak down 20 ticks, and everyone who's been selling has actually been losing money. So they've been selling, but they've been losing money because the timing of the sell, and it's not having those types of momentum washes like we had yesterday, in the Bund. A true momentum move when you sell the order, when you sell the market, you time it okay. You should not have to battle with the trade as much. A pure, powerful trend move that's showing large, great auctioning velocity. But what's also happening is, as the market started making lower lows over here, you started then getting an anomaly, what I call it a volume event. Now, a volume event, how I define a volume event, is a shift in the personality of the auctioning activity compared to the most recent move. Okay, so what that means is if the market is trading down, then all of a sudden it reaches a certain level, and then all of a sudden it starts auctioning and starts doing a really block auction. So it starts saying, okay, there's someone of interest here. And what actually happened when it made a new low, it snapped through. It only traded. So here there must have been about, if you looked at the volume profile on your ladder, you must have had about 10,000 lots there, 12,000, 14,000, and then all of a sudden it made a new low and skipped right back, and it only traded like 400, 600, 300. Okay, so all of a sudden it stopped back up there. It was a bit of a stop hunt of maybe these areas that were accumulating over here. You could feel everyone, as soon as everyone sold through there, then everyone, you hear the floor, then all of a sudden the market pops right back up. Guys are having to start squeezing out and paying out. And then what invariably happened is this, and I'm taking records, I'm feeling the floor, I'm feeling what the activity is going on the floor. I'm watching the ladder, I'm feeling how difficult it is for myself to sell this market. So I'm using that psychology of the herd, because it's the herd that invariably causes the swing highs or the swing lows of the market. But with that, you're also seeing certain types of events. But what's so important for yourselves, as you develop your strategies, as you develop into a better trader, is these types of areas. If you've been very cognizant of your emotional, psychological response in these areas, your trading strategy that you're trying to deploy at those lows, all of a sudden, at the end of the day, if you record that, you might not remember that in that session, but it'll come back to you again later on. You might record something that you don't really know what you're recording, but by having this active kind of journaling technique that becomes better and more dynamic, you start being able to pick up these patterns down the road, and all of a sudden you start designing and developing your strategy. So from this perspective, when that started happening, it was the first time then I started getting long. I started buying in the zone, knowing that it shouldn't really print over here. But what also happens, the nature of this pattern, it auctions. It goes a little bit higher, but it's just auctioning this range. And that's what it was doing for the next 4 hours. And then eventually it started rotating up towards the upside. But the great part of this strategy is the following session. After they've accumulated as many shorts as possible, because what happened, then breached up higher, came back, quite significant, off the session. But the next session, this is the result, is the revelation, this is the cause, this is the effect of all of that activity that went on there. Everyone that was getting short, everyone when someone was just accumulating, and what they would do, they would accumulate. They'd stop the accumulation, let the market go lower, and maybe you could potentially see that on the delta, where all of a sudden you're seeing the delta going down significantly, but the move of price going down at a lesser degree, which kind of is telling you someone's sitting there and absorbing. So you got delta moving down sharply, but price isn't as advancing as negatively as a normal day when the market is shifting down. So if you have a minus 20,000 delta, normally you should maybe have a move of say 70 ticks. Whereas on this day, say if you had minus 20k delta, you actually have only had a move down of 20 ticks. So you can have someone absorbing on the off day. He keeps on allowing the market to drift lower, and it could be a volume slice order, it could be a time slice order, and these types of orders are saying, okay, we don't really care how far the market goes down, but every time we see a 3,000 orders going through, we'll absorb that. Or every 5 minutes that 3,000 orders go through, we'll absorb that. So you can even have someone accumulate as price goes down. There's all various types of order types. But what's important? It's very important to understand the institutional nature of these of these buy or sell side machines. But just your observation of saying, well, I'm selling it and I'm really struggling over here, and as a result of that session where there's a lot of frustration, invariably not many people get on this bid because a lot of locals are exhausted, they've been selling all day, they've lost their risk stamina, and this is the ability to have great awareness about yourself. Then all of a sudden the next session comes in and you have an effective move that blasts up like that, and that is because it's almost, this is the output, this is almost the this being born out of the birth of this accumulation area that went on there. So this is the backdrop for that move. This move doesn't just come out of nowhere. It comes out of an area of supreme herd mentality exhaustion on the sell side. People sitting there, people coming, you feel people saying, well, there's a low, so they get blinded, there's a significant low, and they're all selling it, but the market's not advancing downwards at the trajectory or at the speed that they expect.